studying your last two. I swim med when they turned in. The styrene down to mute. And can learn the pole that sunk he died.
Welcome to our first practical example of preparing a T2 corporate tax return. In this case, we'll be working with Baker's Dozen Limited, a family-owned bakery located in Ontario, Canada. The company was incorporated on March 25, 1984, and its fiscal year ends on December 31, 2019. This is a profitable year, which means we'll be calculating corporate income tax based on positive earnings. The company is owned by 5 family members, making it a closely held corporation. Knowing who owns the corporation is important because this information is reported on Schedule 50 and can affect corporate control, associated corporation rules, and future tax planning decisions. Although we are preparing a real corporate tax return, remember that our role here is that of a junior tax preparer. We are not responsible for making tax planning decisions. Instead, our responsibility is to accurately prepare the T2 return using information that has already been reviewed and finalized by senior accountants. By the end of this example, you'll understand how a complete T2 corporate tax return is prepared, from gathering company information to calculating taxes and completing the final return. This example will serve as the foundation for everything you'll learn about Canadian corporate tax preparation. At this stage, it's important to understand exactly what information is already available to you and what your role is as a junior tax preparer. In a real accounting firm, senior accountants or managers first review the client's financial records, perform any necessary tax planning, and make important strategic decisions. Once that work is complete, they pass the finalized information to the junior tax preparer. As the preparer, you are typically given the final financial statements, an adjusted trial balance, salary and dividend decisions, tax adjustments, details of capital asset purchases, and shareholder information. These documents provide everything you need to prepare the corporate tax return accurately. Notice what's on the right side of the slide. Tax planning, corporate restructuring, deciding between salary and dividends, and other strategic tax decisions are not part of your responsibilities in this example. Those decisions have already been made by experienced professionals. Your primary objective is accuracy. You need to correctly enter the information into the tax software, complete the required schedules, and ensure that every number flows properly through the T2 return. This is the typical workflow followed in professional practice. The senior accountant performs the planning and review. Finalized numbers are prepared. The junior tax preparer completes the T2 return, and the result is an accurate corporate tax filing. As you work through this example, think like a professional tax preparer. Your job is not simply to enter numbers, but to understand where each piece of information belongs and how it contributes to preparing a complete and accurate T2 corporate tax return. Before we begin entering information into the T2 return, it's important to understand the key tax items in this case and the overall workflow that professional tax preparers follow. The company purchased several capital assets during the year, including a delivery van, baking equipment, and computer equipment. These assets are not deducted as regular business expenses. Instead, we'll calculate capital cost allowance, or CCA, which is the tax depreciation allowed by the CRA. In this case, the manufacturing equipment also qualifies for accelerated write-offs, making it an important tax adjustment. Next, notice the late filing penalty of $1,850. Even though this amount appears in the accounting records, it is not deductible for tax purposes. We'll need to add it back when calculating taxable income. The company also made a charitable donation of $550 to United Way. Although it was initially recorded as an expense, donations receive special tax treatment. We'll remove it from regular business expenses and claim it separately under the charitable donation rules. Another important figure is the capital employed in Canada. This amount is used for determining eligibility for certain tax benefits, such as the small business deduction, and appears in other corporate tax schedules. Now let's look at the overall preparation process. We begin by reviewing the company information and shareholder details. Next, we import the financial statements and convert them into the CRA's GFI format. After that, we make the necessary tax adjustments, calculate capital cost allowance, determine taxable income, calculate the corporation's tax liability, record the tax provision, and finally complete the T2 corporate tax return. The most important takeaway from this slide is the overall mindset. Preparing a T2 return is much more than entering numbers into tax software. It is about understanding how accounting records are transformed into taxable income by applying Canadian tax rules accurately and systematically. Once you understand this workflow, the entire T2 preparation process becomes much easier to follow.